It's about that time of day again, folks. Good morning out there. Welcome aboard. Welcome aboard. Thank you for joining myself and Marty. I'm JJ at School of Trade. I got Marty Errico from Traders Audio. This is our daily 7:30 a.m. morning prep from screen to floor. This morning's going to be a pretty unique morning prep, guys. Many of you have probably never seen a prep done this way. My name is Joseph. I'm a technical analyst. I'll be working with a top-down approach this morning, analyzing crude oil all the way from weekly charts down to what I call the VIP London trading session. We're going to be anticipating direction today at the open so we can find high percentage trading opportunities starting at 8 a.m. Eastern Time. So we're going to give you a very easy approach to find those high percentage trades today, and I'm going to do it from looking from charts. And then we're going to invite my good friend Marty to join. And Marty here has his feet on the ground on the NYMEX exchange, and he's going to provide us a lot of details that I can't get from my screen here in Los Angeles. And we're hoping that he's going to be able to give us a little bit more insight. We're going from the screen to the floor, and Marty's going to deliver some commentary, some analysis that he's seeing regarding the direction, divergence, internals. He'll take a look at some of the options, and of course, we'll go over the most important pit-traded session levels from yesterday. And at the end of this call today, we're both going to have some directional clues and some high percentage trading opportunities waiting for us here. Without any further delay, I'm going to open up my screens and we're going to get over to starting with a top-down approach here on crude oil futures. Let me share with you here a couple of charts here we've got up front. Now, first of all, I'm going to zoom all the way out here. I'm going to start with a 4-hour chart this morning. Now, this 4-hour chart is a great combination of long-term and short-term trading opportunities. In fact, if there's one chart that I think is the most important for an intraday trader who is looking to find the highest percentage turning points and, of course, trading opportunities, this would definitely be it. This would definitely be it. The 4-hour chart is a 240-minute chart. I'm going to go ahead and post this chart here later on this morning on the blog once we're done. Sorry for the link. Sorry for the transmission there. All right, so we're good to go. And the first thing we notice is this big run-up, right? This should, of course, come to no surprise to everybody because we all remember this price tumbling on down, made a bunch of cash on that, and then brought it right back up. So we can see here the rising prices here have created many what we call demand zones. These demand zones are very unique, and I teach these every day in our trade room. These demand zones are a little bit different than just swing lows and swing highs. This is where we anticipate, based on candlestick structure, where we anticipate demand to re-enter the market. So you'll notice we just broke through, now of course, the red boxes above you. These are sell zones. These sell zones represent supply in the market. That's right. They weren't lying to you back in economics class, back in high school, right? That's right. Markets move from supply to demand. Now you can see here yesterday, we actually went right through that 93.59. And you recall on yesterday's broadcast, we talked about that big round number. What was it again? 94. And how we had to close above 94 to leave the door wide open here for the buyers to keep on pushing. Well, we can see we got through that 93.59 level. What does that mean, by the way? That means that there was enough demand. There was actually more demand, right, which overcame the supply. At 93.59, supply entered the market. Sellers entered the market. Buyers took profit. Price bounced just a little and kept on going right through, as you can see here. Now we have the next test, 94.79. We can easily see with all of the wide open spaces above us that if we can poke our head and get a 4-hour close, that's going to be the key. If I can get a 4-hour candlestick to close above 95.12, we can pretty much bank on 97 is in the cards relatively quickly. Whenever we see these wide open spaces, we know that price action loves to fill these gaps. It's a psychological trading kind of a phenomenon, right, where what we focus on is what ends up happening. Once we break through 95.12, I will be buying pullbacks on the way up to 97 even. Write that number down, 95.12 and 97 even. That's going to be a wide open space we'll be looking for. On the flip side today, if price is to test, consolidate, and then fall lower, this is a huge selling clue. Again, we've had this big run up, as you can see here, probably about a 78, 80% retracement of the high. And so we can see here, if I was to take out my Fibonacci tool right now, I have what I call the last call fib. And you can see here, my last call fib is right about here. So we've got a little bit more room to go here before we start running right into some serious resistance as we try to test that full 100%. In other words, price has just as much likelihood of testing this sell zone and reversing. When it reverses, I will be selling retracements down to the next buy zone, where we anticipate demand to enter the market at 92.63. As you can see here, we have levels above us, just one level above us to keep us from hitting that wide open space to buy long. If we start to move lower this morning, we're only 20 minutes away from this 4-hour candlestick closing. If this 4-hour candle closes here below 94.20, we definitely look good here to the downside. Let's go a little bit faster though. Let's take a look at a 60-minute chart, because the 60-minute chart is going to show me a lot more detail here about crude that we're going to be able to use this morning. Here's my 15. Where's that 60? There we go. 60-minute chart. This is my hourly chart. A very important clue shows up on the hourly chart. Do you see it? Bull channel. There's a big channel here hidden in. Now, this is one of those channels that we had to use some Fibonacci. In our trade room, we teach our students about what we call advanced price structures. Advanced price structures are pretty simple. A channel can look like a channel, but a channel can also be confirmed using Fibonacci. This is actually a very unique situation where we can see that Fibonacci right now has successfully predicted the resistance at the top of the channel and now has projected, which we'll hope will be successful projection, of a channel buy zone. You can see the channel doesn't quite make sense yet, but the Fibonacci helps us read between the lines. And this is one of those things that you can't get on the floor, right? You can only get these on your screen. So now we use our Fibonacci retracement tools to give us a key buy zone. And this buy zone, you'll notice, comes right around that 93.06. Write that number down too. That's going to be a number I'm looking for throughout the rest of the week this week. Well, I take that back. As long as we haven't made new higher highs. If we make new higher highs, we are going to have to rethink this buy zone. This buy zone will come up as well. But the reality is, if we head lower, I'm looking for a buying opportunity in 93.52. More importantly, I will go in large size with a buy in the 93 channel buy zone. So we know we're looking for on the horizon today, if we can get down to that 93 even, big buying opportunity. This is one of the rare occasions where we've actually anticipated this channel well ahead of time, so we can be positioning ourselves beforehand. And we can also see this as a buy zone here at 93.52. So short-term buying opportunities after we tumble lower, 93.52. Big buy opportunity at 93 even. That may come today, that may come tomorrow, it may come on Friday. We don't know quite yet, but we know that if we go higher, we've already talked about this before, we know we've got to make it through that sell zone. I'll tell you, this bull channel brings a lot of confidence to the buy side, doesn't it? This bullish channel tells us that the higher percentage trades are going to be to wait for price to test a trend line, wait for price to test 93.52, wait for price to test 93 even, and then look for your entry triggers to get long. These anchor charts are simply giving me the location. That way I can use them now to make educated decisions. I'm going to drill down a little bit closer here to a 30-minute. This 30-minute tells us the obstacles we have to overcome this morning. We're talking about 93.52 for a buy later on this morning, right? We're talking about 93 even for a big channel buy later on this week, right? Well, to get there, now we know what we're going to do to get there. Now we know we're in its sideways trading range. Now we can see on this 30-minute chart that we've tested the 94.28. And if we start to go higher, we can buy pullbacks in the short term up to 94.74. Price consolidates, we'll do the exact opposite. We'll sell that retracement right back down to the buy zone right below us. We can also see if we fall lower. Buy zones and sell zones get broken all the time. If we break a buy zone, we know there's just too much supply to meet the demand. So too much supply, we'll push it through the demand level. 93, 95, same thing. Every time I enter into a buy zone, I'm looking for consolidation, and then once price goes in the opposite direction, I now know that demand was enough to reverse the prices, and I'll go back up to the next sell zone where supply enters the market. Again, we're looking now at, courtesy of our 30-minute chart, 93.95, 93.52, 93.18 and 93 even. Those are going to be my key levels here as we go lower. So with 4 different locations to buy, which ones will I take? How do I know which ones to take? Well, we don't predict. We react. I'm going to wait right now. If price starts to rise higher, that would be a close on the 30-minute above that 94.28. I'm buying. If price goes lower instead, again, I'm not predicting. I'm waiting for the reaction to the rising prices out of that buy zone, and I'll buy accordingly. Same thing as we go lower. I'm not selling in the sell zone. I'm not buying the buy zone. I'm waiting for the reaction to it. These are nice short-term buy zones that will give us buying opportunities on the way down. And last but not least, I want to show you my VIP chart this morning. This is going to be our analysis of London's trading session, a very, very important chart of mine each morning. First things first, we'll notice the size of London's trading range. The size of London's trading range, relatively narrow compared to what we've seen recently. You can see here we've gone from top to bottom of this range here. We've got about 50 cents, so we've still got plenty of room to go here to the downside. Please be aware, though, that when we're trading inside of London's trading session, I am treating this as support and resistance. I will trade this sideways. And if you saw us yesterday, just like I said yesterday on yesterday's broadcast, if we leave the zone, I will look for reversal, right, in the reversal zone, either above or below. Look for that 272 to be your reversal zone, above and below. That's a very high percentage trade. When we leave London's trading range, fail to break below the reversal zone and head back in, we can pretty much bank on the fact that we're going from top to bottom, and that'll happen vice versa. This morning, as we recall, we had reason to believe that we were going to be falling lower this morning. So if we do move lower, I will be looking for a fake out breakout price reversal buy at London's lows. I'll be looking for a fake out breakout reversal buy at the 272. If we keep going lower, I am then selling retracements down to the London golden ratios and the overnight extension levels. We do have major support down here at 94.69. We will take final profit with a runner. If we can do it, we'll get it down to that 93.60 area. So we can see here plenty of areas to be buying with reversals before we get too far to this London session. And again, the same thing will happen to the upside. Fake out, breakout, I'll sell short at the highs, sell short at the highs. If we break above the 272, 94.75, I am buying pullbacks all the way up. In the short term, I am bullish right now. In the short term, I am bullish off the lows of London. But you know what, though? I'm just a lonely old day trader here. I'm just looking at screens here in my office in Los Angeles. Let's go across the continent over to Marty. Marty, grab that headset of yours, and let's talk about what's happened in the pit this morning here, my friend. What do you got for us?
All right, ladies and gentlemen, good Tuesday morning to you. Talking last trading day of the month here. We're looking at April 30th here. So we're down here on the trading floor today, and we're looking at kind of the same variables we were looking at yesterday. Now, for me to really feel, and a lot of the guys on the trading floor here, for the bulls to be in control, I think that level that I'm really watching and I'm really going to drool over is going to be the 95 even. I believe we need a break, a close, and settle above 95 even for us to really be bullish in this bullish market. So I'm thinking if we do get a break, we get an opening print, anything above 95 even today, we'll be bullish, right? Other than that, I think we could trade sideways. And obviously if we really reject that 95 even and we don't even get anywhere close to it and these options start kicking in, remember I was telling you guys about those option spreads that were coming in the pit the other day. We had the 94.5 on the top of them, right? So they could start kicking in. We could start seeing a lot of those calls being sold out of those call spreads in the daily, weekly, monthly options, and we could start to see a little bit of a reversal. So my main focus here, 95 even. Ready? If we get an opening print below 94 even, we get that opening print once again below 94 even for your pit session, we'll be bearish. And if we just kind of watch and see what happens here, if we open up anywhere above those levels, we're going to be seeing sideways activity. So again, any type of test, break, close, settle above 95, we're going to be quite bullish, and the market will just trade higher. Again, according to all these strike levels here I'm looking at in the options. We'll get to that in a minute though. And simply put it, anything below 94, we're going to be bearish. So again, it's a pretty simple here plan of attack. If we open up where we are right now, we're going to be sideways. Basically, we'll see a sideways range. We'll see a sideways type trade, as JJ was just mentioning here, in between London's trading session. And we're going to have to keep an eye on those levels that JJ was just looking at. So we will see exactly where we open up today. We will be watching exactly where we open up today. And then, ladies and gentlemen, what we're going to be doing is we're going to be keeping an eye on our other multiple market divergence. So real quickly, let's just talk about a few other things here. Let's talk about our multiple market divergence, talk about direction, let's talk about where we're going today. First and foremost here, I just want to remind everybody that we have the beginning of the Fed FOMC meeting today. They begin their meeting and they finish it off tomorrow. We have a couple data releases today as well. Really nothing too crazy or big. I think the biggest one will be that 10 o'clock consumer confidence number. But let's take a look and see. We have ISC Goldman Store sales at 7:45. At 8:30, we have unemployment cost index, 8:55 Red Book. 9 o'clock, we have the Case-Shiller housing index, 9:45 Chicago PMI. And like I mentioned here, 10 o'clock, we have that consumer confidence. I believe that number will really be the biggest one that could potentially move the markets again. But really, we just want to be knowledgeable when these numbers are coming out. So again, I'm just thinking the consumer confidence number could affect the dollar, and in all reality, the risk-on, risk-off sentiment with the dollar will tell us whether crude gets it reacted by this number. So again, we have to get these clues by risk-on, risk-off to see if this really will, any of this news will affect the crude. So again, I'm just thinking that 10 o'clock number could be the market mover. All right, so let's continue on now. Keep in mind also tonight we have the American Petroleum Institution numbers. Those are API, American Petroleum Institution. They come out with their inventory numbers tonight. And that's our leading indication on the DOE EIA numbers. So tomorrow morning when we check them and when you guys here listen to the commentary, we'll have API numbers in front of us and we'll be able to get an indication whether we'll be looking for a draw or a build and whether that comes in line with the analysts' expectations. And again, we'll probably see a market reaction in the overnight session from those numbers. Again, it's just a little secret that comes out, hits the trading floor late afternoon, and we like to look at those numbers to use them as an indication. So right now, ladies and gentlemen, here we have your crude trading in a little bit of a sideways range between 94.10 and 94.62 today. Same exact thing in the RBOB. Again, RBOB trading 281.32, just sideways right now. Heating oil, same deal here, 285.36 is trading in now. We're talking about sideways activity. One thing here, evidence for a little bit of a sideways to lower type price action is the fact that we have volatility here higher. We have the OVX closing up around 23.44 yesterday. Again, the OVX is the cash market volatility. Right now, your implied volatility sits and hangs out around 23%. For the heating oil, we have your heating oil volatility sitting at about 25%, and that's RBOB. RBOB volatility sitting at about 25%, and your heating oil volatility just chopping around 19%. Ladies and gentlemen, here open interest on your crude oil futures contracts currently stands at 310,840, which is actually just a little bit less than yesterday's open interest, and just about in line with yesterday's numbers. Again, 310,842. In your RBOB, open interest currently stands 93,000 even, and in your heating oil, 99,818. Again, open interest ticks higher. Just I believe in all three of these markets. Again, I believe we saw crude open interest at 303 or 304 yesterday. So we're actually higher in all three open interests, indicating possibly some shorts could be here in the market. So again, just a little bit of an increase in open interest, but nothing significant. It can just really kind of just tell us that we are sideways at the moment. Again, we're waiting for that $95 level to get breached here. So those are our levels here. Let's talk about here again. We just talked about volatility, rather flat right now. Again, we were a little bit higher in vol yesterday, but we'll have to really see again if we go higher in volatility right now. That's going to cause crude to trade lower. When we come in volatility and say we get around 20%, 21%, that's going to be quite bullish for the crude oil, because right now the reason being, usually we look at volatility with the association of movement in the market, but right now we're looking at vol and we're saying there's very low volatility in these strike levels above 95, 95 half, 96 even, 96 half. We have lower strike, lower volatility. we have higher volatility in the strike levels below 93 half, 93 even, 92 half, 92 even. So we will keep an eye on that volatility. Gamma has been just getting annihilated the last couple of days. You can see nowhere near close to a break-even range. We've just been trading higher. Delta's about 50% here, which associates with decent movement. Again, you've been seeing these $1.50 ranges every day the last couple of weeks. That's because of this decent delta. I wouldn't call it high delta. Again, 50% is decent. We're seeing a little bit of movement associated. Once we get up to the 60, 70%, that just shows they're buying the idea of movement. They don't care what side it is. But that's basically the sentiment that's happening right now. That's kind of the range and movement we should be expecting for the day as well. All right, so now let's talk about here now your spreads. Again, we talked about multiple markets verdicts. Let's talk about some spreads here. I'm looking at your Brent, still holding levels above 103 half, which is going to be a pretty big level of support. Again, as this $94 level is going to be a pretty important level, and if we break below that, we could see obviously a little bit of a lower price level, as JJ was saying, and we can trade down. We are looking at the Brent, that 103.50 is going to be the equivalency of that the $94 level here in your crude. So once again, we will keep an eye on that. Brent crude trades 103.65 right now. So awfully close as crude is to that $94 level. So again, those big round numbers we're looking at. The Brent WTI spread trades well below 950. Oh no, 945 basically right now. Earlier in the day, we were trading around 935. So again, just a little bit of a 10-cent range. But most importantly, right now, Brent WTI spread trades 945 again. Rather a little bit of backwardation. Yesterday we saw that spread almost trade down to $9 even. So to me right now you can see it's backwardated by about 14 cents or so. We opened up today earlier here on the Brent WTI spread just around the let's see, we opened up here the spread at about $9.34, $9.34. So again, a little bit of backwardation indicates crude trades lower, and that's what you can see what just happened here basically in the overnight session. Overnight session we have traded a bit lower here in the crude, and again, as this spread widens out, backwardation we call it, crude will trade lower, so we'll be watching that spread as a good indication. Right now, ladies and gentlemen, here your calendar spreads are showing just a bit of backwardation as well by 2, 7, and 4 cents. 2 cents here in the June to July contract. That's 20 cents we have. Carry at 20 cents on the June-July. June to August trades 15 cents, 16 cents now. Carry is 16 cents. Again, that's up by 5 ticks today. And we are looking at your June to SEP contract trading right now, ladies and gentlemen, at an inverse of 7, believe it or not, here. And we're also seeing it up by 2 ticks today. So again, a little bit of backwardation in the spreads indicating prices could trade lower. We are going to be watching for that opening print of 94. Let's talk about some levels real quickly here, ladies and gentlemen, and then we're going to be pretty much here wrapped up, and we'll talk about natural gas as well. Alrighty, guys, so right now we're looking at your crude here. Your pit session high from yesterday's trade, 94.69. Your low, 93.18. We closed and settled the day at 94.46. Yesterday we had a net change of about $1.11 in a range of about $1.50. Today, your daily pivot comes in at 94.11 today, once again, as we are trading right near daily pivot. Again, overnight session low is going to be your daily pivot, so that's why that level is so important of 94.11. It's going to be very important if we open up below daily pivot. That's kind of be a little bearish, but like I mentioned, if we open up above, that would be fine. Levels of resistance, 95.40, 95.81, 97.32. As JJ was mentioning, again, once we break above that 95, we'll be right up to the 97. Alrighty, guys, support down below 93.52, 93.60, and 92. Oh, sorry, 93.60, 93.52, and 92.07. So again, those are your levels here. Support, resistance above, below here in your crude. Alrighty, guys, let's take a quick look here at your natural gas, ladies and gentlemen. Here, your high from yesterday's pit session here was 439.5. Your low, 428.90. Close and settle for 39.30. Again, ladies and gentlemen, here we had a net change, ladies and gentlemen, of about 10 cents. Again, a net change of about 10 cents here yesterday in the trade. Higher, of course. Again, we're talking about higher prices here in your natural. Ladies and gentlemen, right now here what we've been watching is also a range, ladies and gentlemen, of about 10.5 cents. Today, daily pivot 435.90. 435.90 daily pivot. Resistance above 442.90, 446.50, 445, 447.10. Support down below 432.30, 425.30, and 414.70. Right now here in natural gas, we are looking at a little bit of a bid here. Again, we're going to be watching for us to hit the top of the range of 445, 245, 340, 445, 445. Sorry, guys, 445. Again, we're working our way up to the top of the range at 445. Ladies and gentlemen, your open interest here currently stands 240,237, and your implied volatility is just about 32.5%. And that's really about it, guys. Again, here we just went over here our plan of attack for crude this morning here, and I'm going to hand it back over to James.
Thank you, Marty, so much for such a great commentary this morning. As always, it's great to see the charts that I'm looking at confirm right along with what you're telling me as well. Thanks so much, Marty, for joining us today, and thank you all for being here as well. Once again, my name is Joseph James. I'm from School of Trade. That was Marty Errico from Traders Audio. I want to thank everybody for being a part of our initial launch broadcast this week. Thank you all for coming in and seeing us here for the first week of this, and boy, it's been a great few first days, and we're excited to keep improving. I want to encourage you to take a moment and head over to our blog. We have a link right on sidewaysmarkets.com that will take you right to the crude oil squawk page. And if you would, go ahead and give us some feedback. We'd love to hear what your feedback is. We'd love to hear what you'd like to see covered or hear covered, and what takeaway information would you like. What would you like to have on this blog as you leave for the day today? I'm going to put up my charts for today, but we'd really like your feedback as far as what we can do to make this broadcast the best, because in all reality, all that matters is that you can take this information and profit with it. Once again, my name is Joseph. That was Marty. Thank you all for coming out and seeing us here from the screen to the floor. We'll catch you guys here tomorrow, 7:30 a.m. Eastern Time. Adios, amigos. Bye-bye for now.